Good day and welcome to another episode of your Money Moment, your go-to podcast for navigating the world of personal finance. I'm your host, Mauritz Oberholzer, and today we're diving into a topic that's essential for anyone looking to take control of their financial future. Investing 101. Where to start with limited funds if you're in South Africa. Let's lay the groundwork. It's crucial that before you even think about diving into investments, you prioritize being debt-free. Debt can be like quicksand. The more you struggle with it, the deeper you sink. So focus on paying off high interest debt first and making use of the debt snowball, which I discussed last week, to ensure that you are not struggling with debt and on the other side you're trying to invest at the same time. Additionally, I would suggest building an emergency fund that is absolutely essential. Aim for at least 15,000 Rand, which can cover a few months worth of expenses. This safety net will give you peace of mind and allow you to invest without the fear of financial insecurity looming overhead. So, you've tackled your debt and built that emergency fund. So what's next? Where do you begin investing with limited funds? So let's explore some practical steps. Number 1 is understanding your investment goals. Start by understanding your investment goals. Are you saving for a specific purpose, such as a home, education, or retirement? Or are you just simply looking to grow your wealth over time? Having clear goals will guide your investment decisions. For example, if you're investing for retirement, you may have a long time horizon, which allows you to take on more risk. If you need to access the funds sooner, within a year or two, you want to have a more conservative approach and more accessible vehicle. Next, educate yourself about the various types of investments available. Firstly, stocks. Buying shares in companies can offer high returns, but they come with higher risk. In South Africa, you can invest locally via the Joburg Stock Exchange, or you can even use some of the platforms that now offer the option of buying offshore or international shares, like on the New York Stock Exchange, but there you obviously need more money to buy a share. Secondly, exchange traded funds or ETFs. These funds track indexes and can be a great option for beginners. They provide diversification without needing significant amount of funds, as you can purchase a single ETF that tracks an entire market, like the JSE or the S&P 500 that tracks the top 500 companies in America. Next, unit trusts, or it's called collective investment schemes. The beauty of these is they pool money from many investors, allowing you to invest in a diversified portfolio without needing large amounts of capital upfront. This makes them an excellent choice for those starting out the investment journey. Next up are bonds, so consider government or corporate bonds if you're looking for lower risk options. They typically offer fixed returns, making them more stable than stocks but with lower potential gains. Also, something to remember is later on you might be liable for income tax on those bonds. So that is just something to consider as well. If you're interested in property but can't afford to buy a whole unit, REITs or real estate investment trusts allow you to invest in real estate indirectly, usually paying dividends as an income while also having the potential for growth in value. So some other tips are, if you start with limited funds, it's crucial to embrace the concept of starting small. Many investment platforms in South Africa allow you to start investing with as little as 100 Rand a month. The key here is consistency. Set a regular investment schedule, whether it's monthly or bi-monthly, and stick to it. Over time, your investments will benefit from compound interest, a powerful financial principle that can significantly grow your wealth. Another cool option if you are looking for a longer term investment is the great advantage available called the tax-free savings account. Here you can contribute up to 36,000 Rand per year to this account, and any earnings, be it interest, dividends or capital gains, are tax-free. This enables your investment to grow without tax burdens, which is fantastic for long-term growth. Make sure you take full advantage of this opportunity. Another tip is, once you've begun investing, it's essential to stay informed about the market trends and economic news, but be cautious. Investing is a long-term commitment. Market fluctuations happen quite regularly. Don't let fear drive you to panic selling during a market dip. Instead, remember your strategy and consider these times as opportunities to buy at lower prices. Lastly, seek professional guidance if you do need some help. Investing can feel overwhelming, especially when you're just getting started. So don't hesitate to get financial help like a financial advisor or investment specialist, and make use of them. Help them guide you, help them educate you, and don't try to time the market. Remember, investing is a long-term commitment. It's not a short-term trade. Thank you for tuning in this week. See you next week, same time, same place.
When you're navigating through life's big events, like buying a home, starting a family, or approaching retirement, you need sound and impartial financial advice. Mauritz Oberholzer, a financial advisor at Stonehouse Capital, specializes in personal financial planning. Visit mauritzoberholzer.co.za or call 082-774-1996. For practical and easy-to-understand advice and tips, don't miss your Money Moment with Mauritz Oberholzer, Thursday mornings at 10 on E-Radio.